Welcome back, and joining us for a look at the equity scene is Imtiaz Suliman from Sentio Capital. Thank you so much for your time, Imtiaz. Quite interesting to see this mixed picture in those market boards over there. You're seeing the JSE, also the US markets, and those across the Atlantic. They're seeming that they are quite unsure about the direction in which to go in. What is this based on? Is it based on, actual data that is in the markets, or maybe that it's just a shortened week?
Yeah, thanks, Anati. I think what the market is waiting for is now the outlook on company earnings, and we did see quarter one or the last quarter of 2023 earnings out of the US. So far, it's been quite robust from a US perspective, but I think what you're seeing overall is a bit of a mixed picture with some slowdown in certain sectors, whereby you're seeing the impact of the higher interest rate effect coming through. So, there's pretty much a wait and see scenario. There's not much big macro news. I think the big macro news that we are going to get this week is on Friday, which is on a public holiday, and that's the personal consumption expenditure inflation number out of the US. So we'll only see the impact of that next week if it does come out worse than expected. But nonetheless, the Fed and the Fed speakers have indicated that they are looking to cut rates. Just the timing of that is unsure, and how many rate cuts we get is also unsure. But it looks like, we've reached the peak of interest rates pretty much around the world.
Well, actually, as we're talking about those high interest rates, the South African Reserve Bank keeping interest rates on hold today for the fifth consecutive meeting. What did you make of that decision, but also really the tone that the SARB had on the outlook?
Yeah, I think from a growth perspective, not much of a surprise. Pretty muted growth outlook for this year. We saw the impacts of load shedding being, quite significant in 2023, and we should see some rebound in terms of GDP levels in 2024, as load shedding so far has been a bit better. So we'll see a bit of a rebound, but still, doesn't look that great. GDP forecast is at 1.2%. We as a country need to be growing much faster to address the unemployment levels that we're seeing, the decline in the tax intake. So there is some structural issues, but I think we are bouncing off a very low base. Inflation is a bit higher than what the SARB previously saw, but it is on a downward trajectory, and that's why they've kept interest rates unchanged.
All right. Let's take a look at the company news that came out of the JSE. Lots of results and trading statements out. Let's start off with insurance. Old Mutual, year-end results, they're posting double-digit growth in financial metrics such as sales, the results from operations, and gross written premiums. Of course, it is a trend that we've seen across that insurance sector. We did see the share price climbing over 4%. Would you say that this was a strong performance?
Yeah, I think it was a very strong performance out of Old Mutual. Sales, as you mentioned, was up around 17% for the life segments. The insurer segments also did well. And what we're seeing is, the margin also increased in Old Mutual's case. And that is quite positive. So it shows that there's been a mixed change, because if you do write more of the risk business, it comes with a higher margin benefit, but also some of the cost issues that Old Mutual had are being dealt with. So that is positive in the overall mix. And I think, capital levels for both Old Mutual and Momentum are still very solid, which allows them to have a robust balance sheet and do acquisitions or share buybacks. So in Old Mutual's case, they have opted to do a few strategic acquisitions, such as Two Mountains, which gives them added exposure to the funeral business, as well as the generic business on the insurance side.
Well, let's talk about Momentum, because it also came out with interim results. Shareholders are also smiling because they got a 20% increase on the dividend. Also, as you're talking about capital, further allocating capital to share buybacks, they did have their bottom line up by 48%. Talk to me about the momentum that we saw there.
Yeah, I think a bit of a mixed bag with regards to momentum. The value of new business and the margin did come down,
Yeah.
and that's due to the fact that costs were higher and also lower sales of the risk business. So in Old Mutual's case, it was the opposite of that. So I think we did see some pressure of the risk business coming through, and also on the cost side there is a bit of work that needs to be done on the cost side, but nonetheless, the likes of Momentum Investments, the corporates side, that did particularly well, and Guardress, which has been a fantastic business within the Momentum stable, continues to deliver and grow off a very high base. So I think again, good balance sheet, and as you've seen, increased share buybacks and an increased dividend on the back of that.
All right. Quickly, before we get to your stock pick, Metair coming out with year-end results. They made it back to profit territory, digging itself out of loss previously. That share did surge by around 7%. Is this investor confidence returning to the stock?
Yeah, the share has been sold off quite a bit year to date, and then we did see a bit of a bounce post the trading update. And now that we do have the results out, it shows that the automotive component side is doing particularly well. They had some issues last year, but that's starting to recover. They do have, a difficult trading environment in Turkey where inflation is quite high. That put pressure on their labor costs in particular, and they've got also quite high debt levels in Turkey again. So I think overall, the business is still profitable. They're generating cash. They have to address the issues in Turkey. They've chosen to, curtail some of the exports of batteries from Turkey to Russia because of the war that we're seeing, and they need to find new channels to offload that production.
All right. Well, Imtiaz, let's get to your stock pick. What will it be for today?
Yeah, I'm going with Netcare. Netcare has been a stock that has come under pressure, especially since COVID, where we saw, a stop in activity, but that has started to rebound, although we didn't see the margin rebound as much as one would have thought. So I think what you're going to see now is a lot of focus on cost optimization, the digitalization of some of the projects that Netcare has undertaken to reduce the workload, in particular for the nurses, freeing up time so that they can be much more productive. And then, you should see a recovery in occupancy levels. And on the back of that, I think some margin increase. They also got a very strong balance sheet. So they are doing share buybacks. They pay out a decent dividend, and you should see a decent overall return with regards to dividends as well as some capital appreciation.
All right. Well, thank you so much for your time and for your insights today, Imtiaz. Really appreciate it. That was Imtiaz Suliman from Sentio Capital.